Hey, greetings everyone. Happy Tuesday. Welcome to Macro to Micro Power Hour. I'm your host, Samantha LeDuc, founder of LeDucTrading.com and LeDuc Capital LLC. Very glad that you can join us today. We're going to be talking about lawyering the trade. So what do I mean by that? Well, every trade, there's a bull and a bear thesis, and it's very much an auction of the buyers and sellers. So we need to do a good, let's say, accounting of the both sides, the bull and bear thesis. And right now, the bulls are absolutely running and charging. In fact, it is so easy to trade right now across multiple sectors that my gut tells me it's time for a turn, but I don't have a whole bunch of charts to support an actual turn. This could be a really, really short show. All right, we got Jonathan here. Let me promote him to panelist. I have very, very lucky to be joined by Jonathan Gibbons, founder of VigTech.io, and he has got a really good take of not only the macro, but the market structure. And right now we're going to be digging in a little bit to some of the reasons why we're cautious, but being cautious is very different from, trading lots of bear thesis. We still need to see it proven. So today, I hope it'll be fun to kind of bring out our best bull and bear charts, or at least arguments, and see if we can support them, get some good ideas also from participants. Give us your best arguments for and against a continuation of this market melt up. And I pretty much call it that because it feels that there is very little right now that is languishing. So, Jonathan, can you hear me?
Yeah, can you hear me?
Yes, perfect. Happy Tuesday.
How's it going?
I'm good. Let's do this stop share for a minute. And I'm good. I'm a little, just wondering what we're going to talk about today, because we need to have both arguments, bull and bear. And there's just not a lot of, growling going on.
It's like we use the term lawyer, and we probably scared everyone away, right?
Oh, no, that's exactly. We're not pitching, anything about lawyers. It's just this argument for argument's sake. We have to be able to, at least I do. I look at every situation and say, okay, what's the best defense, offense, and where is this going to land? So we have had nothing right now but a strong continuation, really across multiple sectors, whether it's the reflation trade to right now the penny stocks. The SPACs are still bid up because of the low interest rate environment. Big tech is not losing ground. It's obviously not really screaming higher, but that's okay. It's still safety. Everything that is, inflection point has been running, like the EV space, the pot stocks, prohibition is over kind of thing, anticipation. The staples, utilities not doing anything, but nothing is really falling apart other than volatility, but it has also stayed bid. So it's kind of curious that we don't have this completely full-on belief that VIX is going to fall down to the 17 level. It's still staying pretty bid. VVIX is above 100. What's your take right now on the markets before we dig into some charts and compare?
Yeah, at the moment, right? Like it seems to be a self-fulfilling prophecy of a nirvana cycle. I know that I was looking at some stuff, like a bunch of different work was put out last week from different folks, really good stuff. Travis, he put together something last night. I think people probably may have caught, may didn't catch, but he kind of do some fractal research as it relates to exponential growth and then falling apart of chaos. So and then Lily had done a bunch of work and posted it last week with options degenerate theory, like where things are kind of rolling together. This is fantastic. I suggest everybody take a look at this.
And it's interesting. I bring this up because I read it as well. Luckily, a client clued me into it. I know Travis, so that's it. Just, I didn't see it real time. So he said, "What do you think about this?" And it wasn't just the video, chaos and Mandelbrot set, but it was more the chart that he came up with at the end. Okay, can you see that?
Yep.
All right, so that's a nice thesis. Of course, it needs confirmation, but what I did was I responded to that a little bit, not cheekily, but I wanted to get your thoughts about that. Everybody is typically looking at this type of smile in the volatility complex, looking at the tails, right?
Mm-hmm.
Calls and puts. And right now, I looked at that, and I've been seeing this. Obviously, we talk about this every week. Single stock gamma option flow has been robust, and now options are quite expensive. And those who are maybe underfunded or seeking for protection, the tail risk, if you will, of puts has actually priced up puts as well. So I wrote, this is really cute. This is a really geeky video, scary chart, but I see a pattern that isn't so much, the tail wagging the dog, which we've talked about, so much as a story. Is how the story changes the teller. In other words, this is right now, in my opinion, starting to do this, where when I look at the option flow of what has greatest risk reward, not just at the money, but in the money, deep in the money, has the much, much better chance of it. It's almost like the smile is being put upside down. And your thoughts on that? I'm talking about across this whole skew, this whole money.
Yeah, passive, like the passive conversation. So he was, really touching on the equity nirvana and doom, right? So if you dig into that and you go, okay, what's fueling that? You got passive, still getting the flows, just steady by their buy side. They're not selling right now. They're not going to sell into this. And then you've got and I'm going to show the Momo stock list that I just follow every day now. It's like one of them's down 10% to 20% on one end, and the other end is up 30% every day. It's the wildest thing I've ever seen. Yep. And then you've got of that, you've got about, let's say 300 to 400 stocks that are trading options every day that are predominantly never changing. So like stuff comes in and out based on earnings, but the same set. And I don't know if anybody's looked at this. It'd be definitely worth going to dig into. Some of the stocks that are on my Momo list are at the top of this list every day, every single day. People are buying calls for these stocks, or they're liquidating these stocks. And that is like the active part, and it's chaotic volatility. So you've got what you said is, I think, spot on to an extent that, who's wagging whom? Well, there's passive that's just kind of providing some sort of current. And then the volatility of these single name stocks that's being traded is where all of the kind of movement or trading is taking place, right? Where people are seeing, outsized moves. And that's like, Lily used the term hysteresis in one of her things, and that's the phenomenon of a physical property lags behind the changes in the effect causing it. So basically, what the delta of the call buying on these things just drags these names up, and we're kind of in this drift of just upside situation that will continue until something changes to the underlying passive holding back. So I think that you're exactly right, that it's flipped. And so it's hard to look at that thing and say, yeah, that's exactly what should shake out, when in reality, it's being drugged by the derivatives of past, trading past the actual underlying securities. And I've actually spoken to exchanges in reference to just, data stuff the last couple of days, and they're 100% focused on derivative stuff and more information and data being made available for those features and functions. So, I think that the vol bid is there. I think that it's steady because everybody's like, is something going to change? But unless something changes in that dynamic of all those five, let's say 300 to 400 single name stocks that are traded like every single day, and then you filter in like a Citigroup that comes in and comes out, or a JPM that comes in and comes out, but it's all of the ones that we'll look at in a second. And when you look at those charts, there's nothing but up, inbound flows on those things. So do we, and I'm not, and we're going to like lawyer a trade. So like, I'm like trying to look at this multiple ways here. I'm having a hard time seeing like where this would like turn from that perspective. right? So
Well,
what it is that would turn, and that is like when you're talking about major kind of stalwarts, which I said we were losing legs, right, in this thing the other day, and we totally are. But this passive thing is huge. So you have two totally different aspects: passive through the ETFs and the indexation vehicles, and then you got the active stocks that are trading massive amounts of options. And those options are overwhelming the securities, and you just got that kind of everything's lifting itself up impact. Now, it can't go on into perpetuity. It's just it's something that's not possible. But you can't fight it either. I think Cuppy has the best statement for it. He calls it Project Zimbabwe, right?
I didn't hear that. I mean, I know Cuppy, but what do you mean?
Yeah, and so it's like you can't, what's been enacted by all this is very inflationary. And so when you try to short a very inflationary, and I'm not going to say hyperinflationary environment because we don't see that, in everything in our life, but it is getting pretty inflationary where it's not tied to simply anything except this kind of very extended math complex that we've got going on here, where we're literally trading more of the one side of that curve, right, for options that's dragging up. And you can look, when you look at these charts, it's like,
we're gonna look at the inflation expectations because that's driving a lot of what's going on as well, because real rates really aren't moving up anywhere near as quickly as the expectation. That's in reference to the Zimbabwe, kind of thing as well, hyperinflation. But I liked, actually, Lily had a great tweet that if there's no natural buying at these prices, what happens when the gamma music stops? Now, we don't know. But for me, in my live trading room, I am looking at, sector rotation, and my indicators have not, of course, triggered short on intraday or swing time frames. So there's nothing there as far as breadth. It stayed pretty healthy. Can you hear me? I had a little freeze here. Ooh, or maybe you did. Hello, hello. Oh, there you are. There's a little freeze. But when trading is this easy, that's when I, gut wise, feel like a turn is coming. Oh, you just disappeared. You'll be back.
Yeah, I'm back.
Okay. So what I'm noticing in my live trading room, though, is that there are so many penny stocks. They might have done some massive, split over the past few years. But if you were to, back out of that, you would have a ton of basically penny stocks, low float, low priced plays that are not only just popping up, because that's pretty typical. They pop up and then go right back down. They're getting sustained bids. So the low priced biotech plays, I mean, I could go on and on. There is just an enormous number of very large moves in these left for dead, oversold. It could be value, cyclicals, commodities, biotech. It doesn't matter what it is. Every day there is a new energy, and it's funny because it's not just retail traders, it's institutional traders positioning before they move. I mean, large positioning before these puppies move. So they're catching on. They know how to get some really big rewards from this rotation. But I still think it's also the backdrop of this low real yield environment where we have a huge change in inflation expectations, and I can show you that chart since last summer and the Biden bid and this continuation with oil, coming up, and PMI, manufacturing prices. There's more pressure, et cetera, and a lot of policies, but it has had no effect on real yields. So that's a perfect environment for the Bitcoin and these alternative SPACs, the special purpose asset corporations that are popping up like daisies. 400, came to market just last year. So, this inflation protection is not. It's as if the market is really expecting the Fed to run hot in inflation, but real yields still are not buying it. So, I want to show you some charts on that, but is this part of any of your concern when you look at the market, bull or bear?
Did you see the chart of the 2 and 10s and steepening, right?
Oh yeah.
Just recently, and it has not given at all. It has not given any back. It's continued to go vertical. I looked at that yesterday, and I was kind of sitting there and digesting it to an extent, because that's got the kind of the ugly setup on it, right? Like where we've seen it to be historically pertinent, right? With a steepener, and it hasn't played out yet. So I don't. It's hard to say. I think that when you print what they've printed, and then you've got the kind of other impact of the options market maybe being even more impactful than what was printed. A ton of participants in there. You've got a massive mania, and manias can run so much hotter for so much longer, but then die. And so it's very, very kind of difficult to say at the moment, like what would exactly, and I know there's some good thesis of like a kind of environmental shift that would change that would kind of terminate the mania. But at the moment, unless there's some sort of dynamic change in the options market, and the way that that's playing out, I think it's going to continue to run a little bit hotter. And that was me coming to the table with my kind of bull hat versus bear hat, is just so much perception of liquidity at the moment, because liquidity is a perception, right?
So I brought up these charts for that kind of reason. So first, I have posted this before here and for clients and even on Twitter, because I had a yield pop thesis that absolutely proved spot on, and it has continued. And this is the 2 and 10. It's a little messy, but you get the idea.
Yeah.
So here we are. We're coming up to that next level, which is the 1.2. And this is just a gorgeous, scoop pattern. We triggered just an itty bitty little bit negative, for a brief nanosecond. But this is just a stunning technical, analysis, if you will, of support and resistance. It's on its way higher. But having said that, and that's part of the reflation trade, that's part of, we got it going on with the expectation of economic growth, right? And the vaccine rainbow and fiscal stimulus and. But I grabbed this chart, and then I kind of overlaid my impressions of this, because I have been a yield bull, right? I'm like, this yield curve going higher is something that I've preached. Like, I still see it going higher. But the interesting thing is break-even inflation is near post-crisis highs with equities, right? This is the white line, just screaming higher with equities, while real rates are still negative 1.2 and close to the lowest level post 2003. And the 10-year, actually you can't see that, the real rate. And the 10-year is right here, just kind of grinding out very slowly, but not really buying in the inflation thesis. So this is a fractal, obviously. I'm really curious. Inflation expectations come down, real yields move higher, but this is what is making the environment perfect for a Bitcoin and SPACs and stocks. So it's really kind of the expectation that we're going to have higher inflation with economic growth. I'm still expecting a swoon, but we have not seen any indications of it. And one of the biggest, strongest, monthly charts that I showed clients way back when was when IWM relative to SPX, you can see this, formed a perfect W. This is part of my intermarket analysis. And it just fired above a trend line and above a key moving average. And it did not slow down, which this normally would serve as some kind of concrete and then pull back and then move higher. It went right straight up. So this is, again, IWM to SPX on a monthly. This is how much movement we have had. I think now we start to digest and go inside the channel again. So it's been an impressive move. I don't say that this is bearish. I just say that it's now time for a pause. And the other thing, relatively speaking, this is SPX relative to CRB. CRB is commodities. It's largely oil, but you can see since 1990, I mean, we had some inflection points where stocks, clearly 2013, we just took off, and they have just been extremely strong relative to commodities. This, I would say, is our negative oil print, right? Again, this is intermarket. It's a relational study, strength and weakness. But this is immensely strong visual of how strong stocks have been to commodities, right? Since then, oil has literally moved 100 points. I mean, this was negative 40. Brent hit 60. West Texas hit 58. But basically, that to me looks like distribution of, this thesis of now cyclicals, commodities over stocks. And we've seen just big tech kind of go sideways for many, many months. But this is not necessarily bearish. It just to me says the value rotation isn't done yet. I know that is shocking, but I'm still waiting for this this selling, if you will. I don't see any signals yet, but where the big tech is actually going to succumb to the value trade. And we've also talked about this for a while. This is my chart that I've been showing since September 4th. Okay, this is just, again, my last intermarket analysis I'll show from this particular theme. But this was actually September 4th when big tech, had this kind of like pullback very strongly, and it continues. But this is a mountain. This is not even done. So what we've experienced so far in the value cyclical commodity, left for dead, short squeeze, all of that is made up of this. So as this comes down, it means that the stuff that was on the ground is popping up. Does that make sense? So
yeah, 100%.
Okay, so this is kind of an inverse. So, and this was when it turned, and they've been really, for me anyway, this has been a great tell for me to say, okay, clients, this is still in play. This hasn't based, it hasn't turned, it's still hot. So keep playing it until the music stops. But I don't have necessarily any signs, and that's what's so scary. It's getting way exuberant. Like I look at, small caps, the same idea, right? With everything that I've just shown here, that's IWM, but this happens to be, SML, the same exact look for XRT, right? This is not sustainable. And, these are gaps. At some point, they will be filled. But in the meantime, this was such an outlier. In other words, relative to 2008 lows for small caps, it just happens to be the 600 because it's a kind of an institutional product. And I think it's a little bit cleaner than IWM, which is 2000 issues, 1900. But you know what I mean? I like this one better, but I'm just still going, all right, I can't believe it's not done, but it is absolutely pushing the envelope, and everything is quote unquote not bullish, but beyond bullish. I mean, the momentum and value together in these sectors, especially small caps, and some of them are still playing catch up, like the energy and the small cap energy and small cap financials. As long as that rate, real rates remain low, and the yield curve is bear steepening up to that 1.2, and until it gets to 1.2 and it starts to actually, maybe pull back, this thing is still a train with very
go back to
miles before it can break.
Go back to that other chart.
Which one?
The one you were just on. Yeah. So if you look at that move, like that move from 575 to 1300, and what is that, 7-8 months? Something
and this
like
was
that.
the Trump, this was the Trump bump, not exactly, but right here, Trump, the whole COVID collapse, and now the trade war is over.
Yeah, look at this, like talking market structure, okay? And you're talking about the auction, right? That goes on at these exchanges on a day in and day out basis. Just look at since 09 all the way to 18 there, right?
Yep.
You've got like the back and forth. 09 you move up into 10, you got a little backing and filling. There's some demand into 11, middle 11, and then into 12, and you start to see into 13 a pretty one-sided auction start to show up, and you get into 15, 16, right? You still see back and forth auction. It starts to get really dumb there in late 17. So when you look at like the auction since 17, it doesn't look normal, right? And so look at everything, even 9, before 9, 7, 8, it's normalized auction. I've seen a couple of charts like showing, not charts like to say, but screenshots of the ladder with the volume of options contracts, right? And then a ladder with a volume of futures contracts from the mid 2010s, right? And then 2010s and then now. And what you see now is this thin, like super thin, like limited auction, and it's all one-sided. So like if you go back to that view you just had a second ago, that one right there, look at the auction from March, right, up through 2021 where we are. That's not an auction.
No,
There's something else going on, right? And you see those gaps. Those are the overnight auction gaps that fill, like that never fill. They absolutely are still sitting out there on the exchange for sale right now. And you see that nothing is even, everything is on the bid side. Well, that to me, like the bear side of this is that this is a mania. There's zero doubt about that because you look at the auction. Then the flip side of that is what's fueling the mania can eat the mania. And so the options, actually, as I say options, so can't get all my words straight. If the options flip, which is what we've been describing for some time, then you don't really need a catalyst at that point because there was no catalyst sans the options and the liquidity to take it to where it's taking it. So that's my bear side, is that there's really nothing that stops this from literally turning over and just killing itself in a natural vortex. When you look at the auction from 600, so if you look at that price, go back to the last thing I'll say about this chart, because it's just a really good view. If you go back, that was a fair value at $600 because it hit it 1, 2, 3, 4, 5 times. Then it came back down for the 6th time, right? Which was in early 2020, and it took off. But it was still chopping back and forth. It was really that breakout that you have pointed right there in your yellow cursor.
Here.
That's where the auction just totally vanished. And so now we're looking at a basically total mania pretty much across the board, which is literally as dangerous a situation as you can fathom because there's literally no auction. It's a one-sided thing that's being basically drug up via that options impact, because all these stocks, right, are holding a market, and this is that passive situation where as the market share rises for these single stocks, they get re-indexed. As they get re-indexed, as a larger market share of these ETFs and the passive vehicles, they get purchased more of. It's literally consuming itself higher, right? Like by nature of the two kind of functional mechanisms that exist right now, I don't have a spot where those die, right? But this is a total mania. This is absolutely, with a shadow of a doubt, a mania, which means the readings can be just cooked. Manias happen for all kinds of different reasons, but the readings can get cooked for a little bit of time, as your point was earlier. And I just wanted to point out the market structure, that this isn't an auction. This is a one-sided freight train that, it's hard to look at those cross-current things.
And it's going to need a few miles to break. And I don't know if it's going to start breaking, but it's funny because a while back, before COVID, it was December, and I had posted this on Twitter. This is really big monthly, this is GAAP, SPX earnings. Anyway, every time it has crossed over, it has basically been a fabulous, big short, if you will. And it has worked extremely well. This was very bullish. And I'm talking about trend trading. I mean, wide, not swing trading, not chasing. Trend.
I remember this. Yeah, it's a great call.
And so it came all the way back down. And this was before COVID. This happened to be December 31st. I posted this because we don't get the data very often. It's quarterly, right? So it's every EPS. I'm still looking at this going, okay, this is what it looks like here. This is what it looks like here. And even Charlie Billio said, with 73% of companies right now who have reported in Q4, S&P GAAP earnings are down 18% over the prior year, right? So this is obviously a much closer look of what's going on. This is not normal for the market to be screaming in a manic mode when you don't have the earnings to support it, but it hasn't mattered. So
yeah, totally. Yep.
So then tell me, if we don't have adults in the room looking at, these metrics that mattered, at least in the past, We just have, and we have obviously a macro backdrop that we've just talked about, negative real rates or bullish Bitcoin and equities and all the rest. We have the value rotation, I still think is alive and well, and we can see it in this kind of manic, I call it short covering for lack of a better word. But
yeah, and the first comeback on this, like heavy comeback, is going to get bought because I missed it. I got to get in. Like
true.
so,
And
yeah, so
it already did. So like this,
yeah, that's what I mean.
this is the NYSE composite where, back in January 2018, it fell viciously. Same, it keeps getting defended. That was, 2019, the Christmas Eve low. We had Fed intervention on March 23rd here. But what do you call this? Like, there's just nothing right now that would be anything short of bullish or manic. And then, of course, the risk of being when it does turn, and I still don't see that, right? This is MACD, and it has been, pretty helpful in the past. When it turns, it'll be dramatic, but right now it just keeps getting supported.
The 3 to 500 names, single stock options from every day being traded at the volumes that they are, right, is something that is driven a lot of this piece, plus the passive, when the passive not having an active participant to offset it, then as the names get bigger, it drags it up higher. It's literally Frankenstein, that word's put out there, but it's not actually being driven by that earnings chart that you showed a second ago. Mm-hmm. Like, you can't. So what drives price? Well, price drives price and bid and ask, not necessarily literally nothing else, right? At the end of the day, in the short term. In the long term, right? Value is the measure of all things, right? Because it's determined, price varies over the course of history. It just totally does. So I genuinely don't see anything at the moment unless something breaks that option cycle. What would actually turn this? What would actually turn it over in the short, like to begin to let those things meet up? Now, what the reaction to folks would be is like, once those do meet up, see it met. It actually met where the earnings were. Well, it should have never really left where the earnings were. Some other dynamic started to come into the place of it. And how powerful is that dynamic cannot be underestimated, in my opinion, because, it's just going to come back and meet that. Well, the flip side of that, to the bear side or the bull side of that, is, well, maybe things just do improve and balance sheet can improve, earnings can improve, and everything begins to catch up to the other direction. Right, so we have the price is right, the value of everything as measured by earnings and so forth is actually wrong. Right, that they're discounting it, and those guys are lying about what they're going to be able to do, or misinterpreting what they're going to be able to do. History would tell us that it's the other way, right? That most of the time it's going to come back to where the fair value of those are.
I mean, what we were looking at GameStop going, all right, we understand what's happening, but we also are 100% sure this is going to be a parabola that crashes. I mean, like, it always crashes. We just have precedents on our hands.
Let me give you this. Let me give you as in speaking with the exchanges in regards to crypto, right? Exchanges, the auction book, creators, that's the reaction. Like,
what do you mean?
Roll their eyes.
Rolling their eyes. Okay.
They're like they're and so the exchanges that are actually they're everything flows through the exchanges.
They can
rolling
see it
their
all.
eyes, right? And so they're rolling their eyes, and so we got these we're down to just a couple dynamics of this thing, and now it's a full-on mania. You only need one or two dynamics to drive a mania. It can probably take out all the active managers that are left to the short side. When there's no more shorts left, then it's just like it gets towards the terminal end. But terminal to me could be 5,000, 4,000. No, look at these charts. Look at these charts, right? These single stock charts. Let me share.
You find this. Charts. Let me just make a comment out loud by Peter. Peter. Thank you for attending, because I know this is he's watching this, and comments have been spot on. He said Sam Zell today said he thought the markets today remind him of 1999 when dot-coms went to the moon, and we're, feeling a little bit similar sentiment there. They died with no specific event turning buyers into sellers, underlying the behavioral similarity from today and then. The global balance sheet is night and day different. There are trillions of debt added in the last year. We know about the balance sheet. Everyone keeps saying doesn't matter. But trillions of debt added in the last year to a bloated balance sheet and lots of support, right? 120 billion a month support in Fed buying. What would change the perception that the Fed has our backs always? You can answer that, Peter. You already know if inflation really does start to, scream higher to the 4 or 5%, not just 2%, that's going to change perception. If yields start moving higher, if dollar starts moving higher, but right now they still have that impression that they can control the short end, they can control this, but with yield curve, a higher dollar, if it did happen, would be de facto tightening. I think they still have, the confidence, if you will, of the market. And that's what's allowing a lot of this risk taking behavior. I can't even all these. I know. Go.
Yeah, look, I was gonna say that, but it ends in the same way it's cooking, right? When the thing that's cooking the meal turns and eats the people instead of cooking. Like, it's just options trading outpacing the securities themselves and just dragging everything right up. And these single names are just the business. Like, look at these names. Like, it's just nonstop. There are zero pullbacks because every pullback is considered a purchase. All these apps that are sitting out there are echo chambers, right? Where the echo chamber is like, this one's hot right now. And so I think I go back to the Robinhood thing we talked about last week, that when you go into Robinhood and you go into these other apps I don't know if you guys have done any research in regards to this. There's a Wealth Tech 1.0 and a Wealth Tech 2.0 as it relates to technology. Wealth Tech 1.0 was the introduction of the kind of gamified trading apps and free trading, right? So that was a transactional change only. Wealth Tech 2.0 is so I would call it the exploration, not the gamification, but the explorification of it. All right. And that's always the second iteration that happens in other spaces. I think that's a huge piece of this puzzle, in the fact that these things are the top 100 stocks at Robinhood are published every day, and they're published inside the app every day, and you can see what everybody else is trading. When you look at this set of Momo stocks,
you can do the same with ARK.
Yes, 100%. So like, everybody's buying the same set of stocks.
Yeah.
And then at the same time, they're buying more options than that same set of stocks. And that's pulling that up. And then you've got the passive flows underneath that are just going to work no matter what. And what changes that is when the options change and it flips, and that just gets incinerated. But you can see that really since the summer, none of these things, and they're all different. They're all different. They all have the same setup. None of them move, right? Like, every single one of them is just following the same trend. Every time they get to a basic type of 50-day or even close to a 50-day, they get purchased, and the vicious cycle starts again. Flows are always on the positive side for this stuff most of the time. And it's the same set of names. And if you go look at so this market has boiled down to literally a kind of concentrated effort of a subset of names, which is very why it feels like 1999, because it's a lot of
but
tech.
It's very tradable, Jonathan. I mean, this is
100%
amount of fun and ease. I mean, it's ridiculous. So one thing that I
so I'm not saying anything bad. Like, to me, like, that's what you look at this, and then I say, I don't even know, is it the Fed at this point, or is the Fed started the fire that's turned into, a full-blown raging
well, we're
thing,
going to have a
right?
little test. I think it's going to be interesting. The Lunar New Year for China starts on the 12th, and there's been an enormous amount of liquidity that's come into China names. I mean, you can look at a chart of Baidu as your parabola, and tons of the EV plays, right? Not to mention MSTR, which is the Bitcoin play, on balance sheets, that has just been hot fire flames as well, because it's Bitcoin, and this is replacing, I might even go into the bull bear case of Bitcoin, because I think this is another speculative asset class, and it became an asset class in 2020. and it's been a rotation trade, but I also can't help but wonder how liquidity will perform when China is closed for a little bit starting next week.
I would say like yeah, it's hard to say like more data is being sold in China than in the United States by six times. I was told
Wow, I
today.
didn't know that.
I did not know that either. I was told that today. It ought to tell you a lot
Wow.
of stuff that's going. I mean, that is like, and that's exchange status consumptive at 6 times the rate in Asia Pac right now, which means that they're coming online and they're trading, and the demand for U.S. equities is very high.
Yeah.
So you can see kind of a world coming online, trading the same set of stocks, and it's running hot. Fair value on all this stuff is just significantly lower, right? Because we're not hunting value right now. We're just hunting these price structures effectively, right? So I think really the bullish case to me defined is, unless something changes in the options market as it relates to these things, then this can continue on, right? And once something changes, the bear side is just right on the other razor's edge of that. Once something changes in the market of the options trading, then it becomes just an incinerator machine. And all these things have no auction. These are auctionless situations. The China ones are full of them. But like, if you look at this, like everything looks effectively the same. And I'm starting to see, just anecdotally, prices in real estate become insane, like absurd. Okay, yep. And I mean, like there's like five bids on a house, right? And then somebody's paying $100,000 more, 10% on $1 million house. What was a $600,000 house is now 1.2. Like a mania has been created. It's across asset classes, and Jim Rogers has the best take on manias. Like, they just body bag out everybody that gets short too early as active managers, and then they body bag out everybody that thought they were actually doing really good stuff with trading.
Are you saying a sold to you market?
I think it's if you realize the game right here, right? Like if you go back and look at these, like a really straightforward way to kind of gauge, in my opinion, just looking at across the board, because all these are really similar, is if you see stuff begin to test 50-day on any of this stuff, you might be like, oh, okay, there might be something here. We haven't looked at 50 days on a lot of these charts in like either between 3 months or 6 months, right? And that's the hallmark stuff of a mania. But you always have a terminal phase at the end of a mania. And I know Jared said he liquidated his bond portfolio. You're talking to him on Thursday and stuff, like his IRAs, like going to cash. Yeah. This is a mania, right? So like, I understand the game that you're playing at this point, and begin to think about, because all things will revert to some sort of fair value. But this is a dangerous side. The bear side of me, the flip side of me, is this is now a dangerous situation, in the sense that you got stuff like this that went from November, it's $28, it's $160, and this thing is just like trading off the charts every day, and the options as well. And I'm just sitting there, and what is fair value of this? Is this an investment, or is this a price hunting, right? Where the next price produces the next price up. And so, markets over the long term will always, in the short run, they're a voting machine. In the long run, they're a weighing machine, right? And so I think that the bigger trends that we're seeing are, and can I fully identify that will outlast all this, is similar to the one that we were talking about the other day, as to the new markets being available via liquidity, via technology. So, like my example of this was we talked to somebody about fixed income markets maybe a year ago, and getting data to create a search functionality for bonds and to rate, like, score bonds the way we score everything else. And they actually didn't have even enough bid ask spread information in order for that to take place for us to quantitatively create that infrastructure to score it. But they were like working on it, right? And so how obscure is that marketplace right now? As that becomes more electronic, you'll see more people be able to trade those things in a much more kind of like auction environment, where it's something that I may want to be into, a turnpike that pays 7%, right? And it's a guaranteed thing by the state or so forth. Those long-term trends of technology that are somewhat driving some of this mania, I think kind of leak into other stuff and they do really well in the long term. This stuff right here is total like kind of a product of its own system, or a product of the current system we have in place at the moment, which will also be the same reason that it incinerates itself at some point. And the long-term trends will come back into play. And there we go again. So I don't think this is a sustainable situation in the long term. What's long term? I don't know, 3 months, 6 months, but it is definitely going to eat itself soon enough. These are now getting parabolic. When you saw like, at some point you got to ask yourself, with regulators or stuff step in on this Bitcoin thing, when Musk is literally saying, I'm put it on my balance sheet and it drives it up 20% in a day, and he's laughing about it, doing the dog thing on his thing. Like, it's become somewhat of a joke. And there's a point of inflection where it becomes systemically a problem for not the SEC, right? For someone else, right? And the infrastructure. So we're probably approaching some of that stuff here, and across the board. But this stuff is every chart. I could show you all these different charts.
Oh, yeah.
We could go through them all. But like, Tilray, like these are a product of I think a big piece of this is the technology piece, where you've got, a ton of new participation, and it's not just Robinhood app. It's Webull, it's Doe, it's all the different ones that are, the free trading apps. The only technology that they built into those apps was see what others are trading, right? Yep. And everybody sees that everybody's trading these things, and it's like an echo chamber that perpetuates price action. You throw in the options on that, and now you just get the thing that's eating itself, and that hysteresis pulls it right up. So I think it's the same thing. Dragging it up is the same thing that kills it. I think the Fed is totally at this point kind of like this. And they always say it's easier, and this is quoted by them, it's easier to fix a bubble after it pops, right? That's their perception. Let's just let it run its course. They know that they've fueled this kind of stuff, this action, but we'll see. And I think the Biden thing today, talking about 75,000 being the cutoff for the top end. If you're under 75,000, you'll get a check. If you're above 75,000, maybe you get something different or something like that. If that comes in again, you're talking about a whole nother slug of fun coupons, right? For the market. So, we'll see. That's my bull case is actually the opposite side of my bear case. That's what I brought to the table.
Okay. A few other charts I want to show. Let me just share.
Yep, go
mine.
for it.
All right. So we've talked about this before also and Craig also, he just made a comment, so I want to respond to that. Okay, Craig says, it seems to me what is needed to prick the bubble would be a strong breakout higher in yields, bonds lower, which we have been talking about for weeks now, as far as bonds just not getting a bid. There just is no rotation. They keep fading and in fact falling. And he says, anyway, and in order to get that, we need, and in order to get that, we need the narrative on inflation to begin to accelerate higher. So tomorrow,
it is 100%. Yeah. It's
tomorrow
accelerating.
Tomorrow CPI print, and Powell also speaks. If we got a hot print and Powell doesn't care, we could get a move higher in yields that ultimately is something people start to worry about. So yes, so we've definitely, this whole push, which the Fed seems to want to allow right now, to allow the inflation expectations and inflation to run hot. At what point does it backfire and obviously cause yields to now put pressure on the lovely, tech plays? And I think I have this new share. No, I don't. Okay. I grabbed this because it's, was beloved before we had this rotation into the hot momentum and the hot value plays and the hot short covering plays. But for the most part, since this big move, higher, you can kind of see pretty clearly that the Facebook, Amazon, Apple, Netflix, Google, Microsoft relative performance to S&P has basically is responsible for it. Like, there's no question that over the last decade, the entire S&P outperformance has come from these technology plays. Like, that's it. Ultra low rate environment, accelerated, relative safety, of growth to value plays, especially as the Trump, trade war took off here, right? Then you can even look at it in a chart of U.S. Steel. But in short, those plays that are inflationary, the real inflationary plays, are still laggards. So that's one thing. Two, this has been in distribution mode for the most part for the past few months. It has still been a bond proxy of safety. So the TLT is fading. The big tech is still being supported, but it's not taking off. It already took off. It has already claimed the throne, if you will, of being the accelerant to all of this, COVID lockdowns and e-commerce, brought it forward many, many years. No
Well,
question.
what's interesting. Yeah, totally. You're right. What's interesting too, you said two things that I would bring up that we've talked about prior, and you can revisit exacts on that, but Tesla's options that you and Spot Gamma were talking about, I believe, that particular date in March, that's related to a big kind of payout for Elon or something to that effect. I'm not sure the whole thing. I think like revisit that here in a second, and then think about this. Like you've seen kind of big tech freeze the mining sector, right? So gold, silver, that whole sector is just in this static kind of mushy kind of sideways downtrend. Not a collapse, but just like, floating by. Then you've got the TLT whole the bond space in kind of the same type of downing, but not going away. And then you've got all of this kind of short vol stuff that's sitting there. And when there's like gold is a volatility trade to an extent, right? Gold typically is pretty volatile trade. All the vol space. Obviously, that's a dumb statement. It's a volatile trade. But like you when you don't have any volatility and it's suppressed at the moment, which is then targeted, then you've got the Momo plays, which are being just bid to the sky. And then you have this stuff not going anywhere, though. It's not like collapsing, falling apart. Then you look at like maybe the best interest of some of these people wagging the dog to an extent, right? That kind of stuff all ties together from a time frame perspective into the spring. That there is definitely kind of if inflation picks up significantly, you've got this, like, why don't you tell me about the Tesla thing that you caught, right? Like that you were looking at, because I think that's definitely worth revisiting here.
Yeah, let me pull that
there's
chart.
A huge payout for them, for him specifically.
And they have to wait, and it has to levitate, between February and March before that comes to fruition. So it is a motivation. But also, just back to the kind of the rate, the 6-month average of the 10-year inflation break even before COVID, after COVID, and it's tracking obviously with all the fiscal stimulus too. So this is a gorgeous, if you will, bullish pattern for continuation higher. You can kind of see inverse, if you kind of put this on its head, it is tracking the S&P as a fractal very, very well. So I still think this is at risk of, at least for the 30-year, getting above 2.3 is where it's going to start to get a little messy. And I'm trying to think, where did I grab that? We're not even there. We're not even close to that yet. So this can still continue to churn higher. I still think the 30-year can continue to move higher. But let me see if I can find that chart on Tesla, because I did post that before. Let me just find it. That was for Spot Gamma as well. I might not be able to find it right now.
Yeah, so we pull it up because I think it's really pertinent, right? In the time frame of this, if we're running as hot as we're running right now, like we're running at a fever mania clip, right? Like if we did this for 3 or 4 more weeks, I was looking at like 2,500 Russell this morning, like the upside target just on natural extensions. Like you're gonna be into these things pretty quickly. Like even any kind of sideways action without any type of volatility is gonna be bought because of the passive flow. So you're naturally higher just by default here of all the different like inputs that I've mentioned, and that jives out with this time frame of the and I think like like I don't want to get into the Bitcoin and Tether thing or whatever, but like at every inflection point that's necessary to push Tesla and then to push, you know, Bitcoin, where Bitcoin is in a quandary, you get this huge tether print. And I know there's a bunch of research and all that out there for this, so I'm not going to belabor it. But you know, I look back. I think we'll look back at some of these things and go, man, some of these things tie together because of the way that they overlay. And this, I thought about this yesterday. Actually, it's just something else I had looked at, and I was like, you know, and I remember exactly what it was. When I woke up and I looked down and the Bitcoin was up like 15%, I was like, okay. And then I look and see that he said he was, you know, had put it on the balance sheet and they disclosed it, right? And it took off, and I was like, then you look at this time frame and it's like, oh wow, like isn't this convenient? And then you had a huge tether print, and then there's some conversation between MSTR and him back in December about how to acquire a massive amount of Bitcoin. And then you look at the conversations about Dogecoin, and you look at this meme stonk mania and all this kind of stuff. And then I'd be very curious to see how this shakes out, looking at this chart with all of that conversation as it relates to the price of both of those vehicles. And I know a bunch of people were commenting about, you know, Bitcoin in the last 2 days. So I'm not going to like dig into it more than this, but I would like to track this kind of like once a month for us to see how this shakes out as it relates directly correlative to his payout, right? And then this whole Bitcoin conversation towards the end of this payout. I think I think it's beyond fascinating that they overlay almost point blank. And
interesting.
you know,
Yeah, I hadn't thought about that. Except I put in chat a thread that was highlighted in Grant's Pub in regards to that Tether and Bitcoin connection, and in particular, the last time that China thought Bitcoin was being used to evade capital controls, the party squashed global Bitcoin volumes. So that's the risk, but it hasn't happened yet. I'm just wondering what will happen when the Chinese New Year kicks off on the 12th.
yeah, the tether prints are just so close to these Bitcoin surges. They're like,
And
you know,
what's
directly
interesting,
correlated.
was it back along this time when Jared came out and said, I'm out of Bitcoin, or I'm shorting Bitcoin, and we actually rolled over. So he had a good timing for that as well.
Yeah, well, I mean, we're at Mania levels right here, so I'm not like calling like, oh, there's a top or anything like that. I don't want anybody to think that I'm saying anything like that, like as it relates to it. What I'm saying is that, you know, that when you're talking up something, like point blank, when I know I have this influence to move stuff and I move it in my favor at a massive clip that directly correlates to a time frame that gives me not a paper, right, or a corporate return, but that's a personal payout from us, right? That's what we're referring to on that. Like that's not a corporate return. That is a in the money for those in the know. So I'm just very curious to see how that transaction shakes out, because also Morgan Stanley has a significant stakehold in MSTR and a few things
so
over
does National Bank.
Yeah, so like
it's on their balance sheet.
Yeah, so let's see how this shakes the tree with as it relates to Musk in March, because there's like probably four gamuts shaking right now, options being one, you got the passive being another, short vol being another, and now we've got I would say the Bitcoin train is actually kind of permeated into other stuff and kind of I think IWM, and Adam told me IWM has the most exposure to Bitcoin from a corporation perspective. So we actually looked at that the other day. So small caps isn't that interesting, have the highest correlation to BTC.
Yeah, right? GBTC, and they just bought a lot more, like 1.5 billion. MSTR, I don't know if MSTR is on IWM. I haven't looked, but Mara and Riot, they have exposure, but it's much less than the.
So the companies like associated with that, now Tesla obviously, right, but IWM has the most companies with the exposure in some form or fashion to it, and that's the auctionless market at the moment. So I think it's definitely down to a few narratives and / math complexes that are driving pretty much the mania. I don't know what inning that we're per se in, maybe 8 or 9. At this point, and the inflation expectations are the highest thing. That it's not expectations. I think if you're not looking around, if you don't have inflation in your environment, then maybe you're in a different environment. We're seeing just kind of like eye-watering inflation in the last 2 weeks that we've seen pop up from, it seems almost like from nowhere, like anecdotally outside of just markets. So it seems to be spilling. I know that like lumber, I talked to.
I don't think it's anecdotal. I think shipping costs are higher, lumber, raw material costs, commodities are
construction projects massively delayed. I think you and I were talking about construction the other night, but like I talked to one of my buddies, does all they're one of the largest lumber providers in the Southeast United States, out of Valdosta, Georgia, and through the roof. Right, massive project delays for anything associated with that. So it's here
too. I mean, we keep hearing that the semi-conductor space and those tied to it, GM has plant closures due to chip delays. China is buying up not just chips, but also chip making machines and chip making companies. So what's happening in this supply disruption has not fed through, I think, in this regard, as far as.
Oh man, I kind of float a question as a business person right out to everybody. Like, so it's great to have things bid up when you're on when you're on the exit side. It's pretty tough to have them bid up when you're on the investment side. And so, like, let's say a lot of this stuff is actually good stuff, and it's got a long-term kind of a really long-term approach. You might be buying it at what it would be at 10 years from now, right? Because of this kind of inflationary impacts, not just the inflation expectations bid, but the kind of dynamics of this option market that have yet to been corralled by a natural order of the market making exchange structure, where they're like, oh, okay, this got a little out of hand. Let's restructure this so it's not going to get as out of hand, because it can't just get out of hand into perpetuity. So once it's restructured, then the prices all aren't as impacted by this on a go-forward basis. Then they're just back to vehicles that they were before, and then everything has some sort of fair value kind of metric. If you're buying stuff that you want to buy it at a level that you paid 4 times what it's going to be at 2 years from now, then you're holding it and kind of you purchased it at a higher rate than you're going to want to hold it, even though it's a great investment. So it's now turning into solely a tradable environment only. Like, you're not even going to be able to hold these things for a longer period of time in the short run, right? The buying and holding at these prices is just going to be hard to substantiate in a long term with everything around us, unless we're simply dealing and we're totally Zimbabwe and we got $1 trillion bills. So like, I think that's my business question to the whole thing. It's like, it depends on how you're trying to attack the final stages of throes of this mania that's in motion. Am I getting the long-term businesses at a price that makes sense? And people will say the flip side of that is, well, interest rates are so low, these prices are fair value. And I just would say, I don't, based on the market structure, it doesn't appear that they're fair value, because most of the bid on all this stuff from institutional side is significantly lower on everything that you want to be holding on to in the long term. Like even SPY, for example, the bulk of the bid runs between 2,000 and 3,000, right? And you're going to be trading upwards of 4,000 here shortly in ES, and 400 in SPY, 450 on thin volume. It just is like one of those things that I don't see. I get some of the arguments of it, but from a business person's perspective, when stuff gets bid too far, too fast, especially really fast towards the tail end, it's like this is totally only a tradable environment. I guess that's the point I would say. It's like tough to say that you would be able to hold these things in a long-term kind of young, especially younger folks. I just don't want to see folks in their 20s get building portfolios around prices that could potentially be 70% to the downside, and then eventually come back in the long term. But what if because we're messing with some really crazy mathematical infrastructure here on these theorems that the option market is creating. Like, it's really chaos, right?
Well, this is to be determined. On the commodity space, though, I have a very bullish thesis. They are at multi-decade lows. So
Yeah, totally.
this is a reversion to the mean trade as far as I'm concerned. It's not just, the dollar is soft and, yields are rising and that pulls come out of these higher. No, I think there is an actual, rush to get into some of these value and cyclical trades because they are at multi-decade lows and short
Totally agree with that. Yeah, totally agree with
has
that.
lit the switch, right? But as it relates to a lot of the other things that we're seeing in some of these, low price penny stocks and sector rotation, nirvana, melt up, that's a little bit different. I think that's the Reddit signal turned short covering signal turned, you know that all the signals, if you will, like you just said, the market makers, they can see where the calls are being bought, and guess what, so can we. I mean, it's
Yeah.
like, oh my god, easy. It's such the pot stocks, the SPACs, I don't care what it is. It's just so easy to see where the money is flowing right now because they're all glomming on to the same gorpy action. It just goes
Yep.
higher and higher, and be careful. But at the same time, when they just keep working, it's, I don't know, for lack of a better word, it is mania, but it's not the same thing as the real inflation plays that are still laggards. There's still opportunity in commodities and in.
Oh, totally agree.
So I don't want to, I want to like separate the bull case of what hasn't yet
Yeah,
risen
yeah.
from the stuff
It
that's
makes total
already
sense.
stupid high. And it has an aura of volatility, like in the biotech sector right now, where I think there are still a ton of opportunities. But
And that's a larger sector than most realize. It's one of
oh
the
my,
largest sectors
and
in
it has
the
been
market.
dormant. I mean, 2013 it took off and it was extremely strong. And then last year it started coming up again. And now they are popping up like daisies. And every day there is a new play and it's up 20, 30%. And the next day it's up another 16, 20%. And the next, and after 3 days, it's up 85%. And these are real companies that are just coming in as, being acquired by some hot hedge fund, biotech hedge fund, and they're positioning for that move in biotech. It's a fabulous sector to play in right now. But anyway, I'm getting, away from that. Is a rotation theme, just like the EV space was, just like the SPAC space was last year, just like the cannabis, prohibition's over space was. Totally different from the market structure that you and I are talking about with SML and IWM, with huge gaps below that need to get filled at some point. So
Yeah, I totally agree with that. There's just a lot of different market dynamics playing out right now, right?
and Sal just said that the VIX, the 50-cent VIX guy came back in. I didn't see that action this afternoon, so I'll be curious to see where some volatility got purchased, because I honestly did not see that. So Sal, if you know what strike that was, let me know, because I'm on it.
What I would say is that knowing the way that the options are mathematically structured right now as an impact to what we're seeing, it will take very little to burn those things to the ground. But I don't mean that, like, I don't say that lightly. They can keep going if you have no volatility or, muted volatility. These gambits continue to play, but there's no really way to throw a nail on what is that could trigger something like that. But as the options take it up, the options can just eat it on the other end. And I'm not surprised to see that bid. I'm not surprised at all. Like it's and as long as VIX doesn't collapse here, that bid gets better and better play. Because the longer this heads toward March, I'd be curious to see those dates on that. Like you said, I'm very curious to see those dates.
Yeah, well, I'm very curious to hear what Jared will say in regards to Thursday. I want to definitely welcome you to come back, because we're going to have someone who's been a good gut trader but macro insightful come back and explain why the volatility trade he sees coming in has basically compelled him to go to cash in his IRA. So obviously there's still a trading environment we can play that's bullish, and I'm assuming this is going to be later in the summer. I don't know if it's something that he smells, or he's got some really good convincing charts or narrative, but I am looking forward to finding out on Thursday. And let me just grab that real quick for the going to cash. All right, so I think we're going to end there because we're still doing the bull bear dance, and right now bulls are winning in certain sectors, but volatility is still staying bid. Let's see what happens. And his argument for going to cash. Do you have any final thoughts or
parting shots?
parting shots?
I really don't. I think that my thoughts are pretty summated in that, what takes this up at the moment, because there's not much left at play, are passive, are options, and the concentration of the volatility action of actually the function of trading being solely in a subset of names, which leaves you with a lot of still left behinds, as to your point. And the stuff that's usually got volatility isn't really going away. It's just kind of sitting to the side, which is so interesting that you're not seeing collapse in the metals complex. You're not seeing a total collapse in the bonds complex. You're not seeing a collapse in the dollar complex. We saw that, like it's stalled out, but it's not like, collapsing, right? Like it's simply basing further. I'm curious that we've had some sidebar conversations, like just internally with this whole Bitcoin thing. It's getting to be very interesting as it relates to Musk, as it relates to MSTR, as it relates to Morgan Stanley, as it relates to Tesla and that time frame. And I'd like to kind of revisit that maybe a month from now. We put a flag on it to come back and revisit that about that time that all that expires, and where are we then? Because we may look back on all this.
With China maybe tightening up the grip on capital controls, because that's absolutely what triggered it last time. I mean,
yeah. So yeah, 100%. So that's what I would say. Like these these are some interesting. Trading is a mania, right? It's a mania trading.
And last but not least, I want to just suggest anyone who's interested in seeing my risk indicators that come out on February 14th. They will be on the VigTech platform. Sign up with your email. You'll get alerted. We get a month of free use, and they are 30-minute time frame for chasers, as well as swing trading across the indices and ETFs. So it's basically right now bullish. Some are neutral, but very few have triggered bearish with obvious, you can look at price action and you can see obviously that nothing has triggered. But when it does, we want to see it, right? We want to be alerted. And these are fabulous tools. And I'm just excited to be able to release them, and they will be out in less than a week on the 14th. So sign up for that.
Yeah. And how this is going to work for you guys, so is like, these indicators are, web-based for the beta trial, and then they'll be on the mobile app as well on the broad release. And you'll be able to set them individually for alerts on these changes that she's referring to. So you'll be able to be triggered on if you're chasing, right? Or if you're looking for more of a broad-based portfolio, hey, when do you think that this might change? You'll be able to get that, kind of buzz straight to your watch or your phone, right, at any given time, or your web, you shoot you an email. So this is all really cool stuff. So we hurried to see that this gets launched here at the end of the week for the beta trial, and you guys give us some feedback, and then we'll tweak it all out with Samantha, and then be all set for you guys to use fully, ongoing, especially as we get in towards where does this all head? It's gonna be really important to have this stuff at hand.
Yeah, so this is, I don't even know how we closed today. In fact, I didn't even look. Let me just look real quick. Okay, so honestly, we're still at that 39.20. Yeah, we tag it because that was almost 39.20. Okay, will be interesting tomorrow. In short, I'm just looking at the market. Yeah, we'll show those. There's going to be on VigTech platform, and basically we'll have to do a little primer, I think, on the weekend and do some video and show what they look like and how to use them. But yeah, they are. I'm excited to release and get feedback. So That's it. I think we're done. It's after 5. I'll wish everyone a fabulous evening and come back Thursday for Jared. And we'll get his take on why he's gone to cash. Thank you, Jonathan. Again, appreciate it.
Thanks, Samantha. Thanks, everybody. Have a great
Bye.
day.